Kimathi. First time we're having you on the program this year, so of course compliments of the season. So let's kick off on your views on the Kenyan market. And of course, it seems that we're looking at global equity markets rallying. African markets have followed suit. And of course, the Kenyan market, after a strong year last year, is continuing on its bullish run. What are your thoughts on the market right now?
Compliments of the new year to you too, Samantha. Yes, the global markets are rallying, and the Kenyan markets are no way different on that note. I attribute this to what is very well documented to be the January effect, whereby equities really do tend to rally quite high in January. And in the Kenyan market, we also have this, though the local interpretation is a bit different in that in January, the fund managers who just closed their books for the year ended December are back to the market, while the retail side of the market is really trying to shore up that shilling of saving that they've had, especially given the end of year festivities with the overspending that many a times come into play. So that's pretty much my take of things, where the bullish market is coming from and what the actual cause is. But going forward, I still do expect that over the first quarter we will see pretty much a flat quarter for the first quarter of the year.
It looks like listed companies are going to be under more scrutiny this year from the capital markets regulator, introducing that corporate governance committee. How do you think this is going to impact companies? What are your views in terms of adherence to corporate governance standards? That's, of course, relative to global norms.
Yes, that has been indeed quite a soft patch on the part of the Kenyan regulators. Corporate governance is always absolutely critical, and the absence, or rather the slight lack of enforcement on several matters has really seen investors come into Kenya with a bit of a worry, and even the local participants only sticking with a few companies, which are mainly the blue chips. So with that particular kind of background, really it's very important that the corporate governance is stepped up across the market, across the board, and for us to all have favorable information and when it is available, because for instance we usually do have quite a number of companies releasing their results way past the deadlines, and that doesn't augur too well in terms of the investors. So with corporate governance being shored up, not only in terms of information but also in terms of the directors on the boards, and the companies also being forced to rack up their capital bases and so forth. Really this is something that augurs well for the market, and we'll also see other companies come in seeking listing, be it in fixed income securities or for the equities.
So it certainly does sound like a positive there for the market. Let's turn our attention to earnings coming out today. Rea Vipingo, year-end earnings for 2012 coming out, and that profit before tax line sitting at just over 555 million shillings, and at pains to point out some of the cost pressures they've had to experience that really hit that profitability line, and of course that bottom line, whereas in 2011 they experienced record levels of profitability. What stood out in terms of the numbers they gave the market today?
Well, one of the things that stood out really was actually their cost containment, and we saw this come out in several areas. We've seen them get much more interest in terms of their financial securities held. That is in part to do with the current market environment that the Kenyan economy has had. And keep in mind that Rea Vipingo is really a regional player. They're the largest sisal producer in Africa, and with this, they are quite hedged, not only in Kenya but also in Tanzania, and also quite exposed to the global sentiment, because a lot of their sisal is actually for export. Now, the cost containment was really something to look into. Though with that huge increase in turnover of about 22%, it's the cost that really hit hard the company, and all in all their profit before tax was down about 18%. Their earnings came in at 6 shillings and 35 cents, and the company actually took the position of maintaining that dividend payout of 1 shilling and 10 cents. So in all, the current shareholders will go home with at least some delight as far as the dividend is concerned. But the very low PE ratio for the company is one that may entice quite many an investor, and with at a PE of about 2 to 3 times, it really, I think, would be something to look into for this company, for the contrarian investor.
And of course, interesting, they're looking to diversify energy or earning streams, looking at wind energy as a potential diversification there. And just before I let you go, Longhorn, of course, listing last year, announcing a new chief executive who's set to take the top job there.
Yes. The CEO that saw the company coming through listing really has had days numbered, unfortunately, and ever since the company released its results in September of last year, there has been an expectation that she would be leaving, and that news came out today that it has been confirmed that we have a new CEO on board. Unfortunately for Longhorn, the company really has lost quite a bit of value for the investor in terms of coming off quite steadily from the highs of 18 shillings to at about 10 shillings, which it's trading on now. The company has lost about 45% of its value. So we hope that the new CEO will really take on the task and show up that investor value, rebuild the shareholder wealth that has been eroded over the past 6 months. But this is something that really is, in this particular case, happened to have been something that the CEO was not in position to control because of a few government interferences and interventions. So we hope that this will come through, and the shareholder will be once again happy to see Longhorn exactly where it ought to be standing. Keep in mind that Longhorn is one of the largest producers of school books, and with Africa growing, really education is always quite a solid investment.